So Gautam, could you give us a little background on value migration and how this report came about?
Sure. So as you rightly put, it's a very big framework which has been used globally. In fact, there is a big book on the same name. It's written by Adrian Slajewski. In that book, he talks about the entire disruption in US corporate industry from 1950s onwards till late 90s across industries, be it retail, manufacturing, commodities, financials, IT. And the reason why we came out with a report on India and this theme is because we found it very relevant way back in 2016 when there was a lot of disruption happening in the economy. We had demonetization going on. There was in 6 months' time, GST was being rolled out, and at the same time there was RERA. So all sorts of reforms, transformational reforms were happening, and I felt that this is actually an opportune time to think of India as an economy as well as the marketplace, where in the next 10 to 15 years, because of these big disruptions, there is a possibility of big value migration happening in a lot of industries. We are obviously at a very primitive stages in a lot of sectors, lot of industries, even though we have come a long way in the last 15-20 years post liberalization. So that is one angle. Second reason why we felt it is very important to do is, in stock market, a lot of time we focus a lot of energies on short term, quarterly numbers, 1 year numbers, 2 year forward EPS. But sometimes we really do not focus as much on 5 year, 10 year, 15 year opportunities. As somebody said, we a lot of time overestimate what we can do or what companies can do in 1 year or 2 year, but really underestimate what good companies can do in the long term. And so we applied this framework across industries. In that report, what we have done is we have given 10 case studies where value migration is already prevalent in India. So that is basically an attempt to establish the proof of concept that this is something which has already been happening for last 10 years, 15 years in Indian market. And then we went ahead and gave around 15 case studies, or rather 15 stock ideas, where we felt that the value migration opportunities are very immense and that can create big wealth over a long period of time. So that was the genesis of this report.
So what are the different phases of value migration, and how does one go about identifying opportunities through this?
Sure. So basically, as he has defined in his book, value migration happens in 3 stages: value inflow, stability, and value outflow. So value inflow is basically the first stage, where a lot of times what happens when a competitor is trying to get into a new space, or rather an incumbent which is very strong, dominant player in an industry, and he has consolidated market share, he has gained a lot of market, he is sitting pretty there. What is value migration? Is the flow of value. In equity market terms, it's a flow of market cap from one business to other. So when a new competitor enters a business and he starts getting market share away from the existing incumbent, dominant player, he is in a value inflow stage. And why it happens is because the existing players, big players, the leaders, they've started neglecting the customer priorities, which are changing. Because these guys have been leaders for decades, they get very traumatized when something changes around their core business model, and they feel that it is irrelevant, it's not meaningful. I am the leader of the business, I know, I have been dominating this space for last 2 decades, 3 decades, so customer priorities are not that important, it is transitory, right? So they start ignoring that, and that opens up the space for new players to come in. So for that player, it is a value inflow stage. He is gaining market share, his growth rates are very high, his margins are expanding. So he is in that happy phase where initially he will start taking value away from the incumbent. Then comes the phase 2, where a equilibrium is established in that business model, where market shares consolidate, growth moderates a bit, and margins stop expanding. Even if they don't contract, they stop expanding. So that's a long period. That is where the real consolidation happens. 10 years, 15 years, the businesses consolidate. The player who has started gaining market share, he will start consolidating his position. And then what happens? Then comes the stage 3. Now this player, who has himself become a big incumbent, started gaining market share and consolidated that position for a long period of time, he is the new leader. Now he starts ignoring the underlying customer priorities, and therefore the next, complacency, and therefore the next competitor or the next player enters and he starts providing products which satisfy the emerging consumer priorities, and this phase then goes on.
So Gautam, in the current context, where do you see big value migration happening in the Indian economy, and which are the opportunities? I mean, if you could elaborate with some examples.
Sure. So I think one of the biggest examples of value migration which has been happening and which in my view will continue to happen for another decade, 2 decades, is the big banking space. It's a very large component of the equity market. 40% of the index almost is now residing in the BFSI domain. And that is a space where we have seen value migration from public sector to private sector banks from last 10-15 years. Public sector has been losing market share, private sector has been gaining market share. Growth rate differential has widened, and that has reflected in the transition of market cap as well. The market cap transfer has been ferocious if you look at the last 10-year, 3-year, 5-year data. And in fact, post the entire asset quality cycle that we have seen playing out in the last 2-3 years and series of RBI changes which have happened on the asset quality framework, I think the pace of value migration has increased from public sector to private sector banks. So you can name any private sector bank, be it HDFC Bank, Kotak, IndusInd, RBL. These are the banks which are going to gain big time in size.
Do you see this happening across the financial services?
I think it is going to happen across the financial services space because the space is large. Even though they have been growing or outgrowing the public sector counterparts by a big margin, but still public sector counterparts are 70% of the banking system. And I think that while these asset quality issues will get resolved sometime sooner or later, the real underlying shift in favor of private sector banks will continue. Second domain where it is going to happen, as you rightly pointed out, within the financial space is in the insurance domain. While LIC is a very strong player and it's not stressed like the public sector banks, but even there we have seen that a market share shift has been away from LIC towards the private sector counterparts. Obviously the service quality, the distribution reach, nobody can compete with LIC today, but incrementally the innovation that private sector players are bringing in terms of their own product, in terms of their own channel distribution, that is going to lead to a significant value accretion for private sector insurance players. So that is big space within the financials, banks, which will continue, and second on the insurance side. The other example which I can cite, and it has played out beautifully over the last 2 years, is in the jewelry space in the consumption category. So what has happened? Jewelry is a big category in India, $55 billion, and organized is hardly 20-22%. Now, post demonetization, GST, and series of other changes which the government has done on the compliance requirement for jewelry players in the unorganized space, the unorganized stress has been comatose for the last 2.5 years. So they are trying to get around with the compliance requirements. The way of doing business has changed for them. So there has been a market share shift away from the unorganized jewelers towards the organized players, and that we have seen playing out in Titan over the last 2 years. And I think again here the opportunity is immense because it's a $55 billion industry. 50%, 60% of the annual demand is jewelry demand, is the wedding jewelry demand. And I think given the demographics of India, that will continue for many years to come. So therefore the jewelry demand will remain intact, and the organized guys will benefit at the expense of unorganized guys. You have very few listed players with size and credibility. Titan is the best play in my view in that space. And then there are series of such consumption oriented categories. You can see adhesives where Pidilite has been gaining, going from strength to strength. You look at consumer electricals, the likes of Crompton and Havells, they are going to benefit big time as the shift happens from unorganized to organized. And even categories like diagnostics, where there is going to be a big shift away in favor of companies like Dr. Lal and Thyrocare. So I mean there are many categories. You look at music, media industry, again from physical to digital is a big value migration. Oil and gas space, again from oil to gas, is a big theme which is playing out in favor of cleaner gas. At the same time, there are examples where there is a possibility of somebody who is very strong today may lose out in the future, which is things like IT probably. Indian IT companies were not leading the change towards digital. Obviously now they are playing a catch up, and the legacy business models are going to become less and less relevant going forward. So I think IT industry is already at a stage 3 of value migration. I'm not saying tomorrow the growth rates are going to collapse to zero or go down, but it has already gone down from 25-30% of the early 2000s to 15-20% from 2008-10. Now we are at around 7-8%. So I think clearly there has been a big value migration which is at play in IT sector also. On the opposite side, we have seen value migration happening in cement. Companies like Shree Cement created disproportionate wealth at the expense of the incumbents like ACCs and Ambujas. So enough and more opportunities exist across the spectrum of sectors in India as far as the next 10 or 15 years are concerned, because I think the way things have changed in the economy in the last 2 years, more and more emphasis on compliance, more and more emphasis on tax compliant businesses, this is going to herald a big shift in favor of organized guys. Obviously 1 year into the GST it's too early to make a judgment on whether it is already happening or not, and therefore people tend to get cynical about the GST as well, that the much anticipated unorganized to organized has not happened across the sectors. But my view is that this is too early to judge success of a transformative reform like GST. I think the real game will happen 3-5 years down the line, when the real shift from unorganized to organized will start becoming visible.
So from a longer term perspective and looking at it from a value migration framework, which are the really large opportunities that you see? Some of you did discuss, but are there any other big opportunities you foresee?
I think the moment you move to $5 trillion economy and the savings rate continue being where they are, you are talking about a really big pool of savings, right? Now what we have seen in the last 18 odd months is a big shift in the savings pool itself, from physical assets towards the financial assets. Now obviously when you look at the size of the savings pool, it will also compound, let's say, at around the same level at which GDP compounds. And if within that pool, if there is a migration from physical to financial assets, the obvious beneficiaries are going to be the BFSI companies, whether it is asset management, whether it is insurance, whether it is wealth distributors, whether it is equity brokers. I think there is a whole gamut of players out there in that domain which are going to benefit big time as this imminent shift towards financialization of savings happen in an underlying rising GDP scenario. I mean 5 trillion is a big number, 25-30% savings rate, you are literally talking about $1 trillion of savings every year. Today whatever percentage of financial savings is there, it's going to compound at a much faster rate as the base itself grows higher. So therefore I think there are going to be multiple winners, multiple leaders which are going to emerge out of spaces, and we will be surprised at the pace at which will happen. And more importantly, there will be new spaces which will open up which are today not even visible, right? So I think the financialization of savings is a big piece within an overall financial space value migration, that quadrant.
When we were doing a little bit of research at our end, we figured that it's simple maths that from 2018 to 2025, if I take a broader time frame, even at a nominal GDP growth of let's say 11-12%, India can easily double its GDP from let's say $2.5 trillion to $5 trillion. Now obviously that is going to take up per capita consumption for the country as a whole as well. What is your broader vision? Where do you think we will be in another 6-7 years? Let's say India at $5 trillion in 2025. How do you see the economy, and what are the broader opportunities that you think exist?
See, honestly, we try and look at it the other way around. So for us, if you look at some of the data points for India, in most of the sectors, the kind of under penetration that we have, or the kind of underrepresentation that we have today, it's so acute that then the opportunities are actually there across sectors. So whether you look at financials, whether you look at auto, whether you look at even two-wheelers, for example, so for a long period of time, we used to think that two-wheelers is a completely saturated market, but now we have reached a stage that households are now wanting to own the second two-wheeler. So it's actually a new set of demand which is getting completely created. For a longest period of time, we used to think that telecom subscribers in India is done, but now look at what Jio is reporting. So why? Because people are now buying second SIMs. So to that extent, even in the most saturated categories, we are seeing growth even at this stage. So if you think from a next 7 years perspective, the numbers can actually be, very large, and the opportunities will actually present themselves across sectors. So we are very confident about that. I think the only challenge to this entire opportunity is that simultaneously we will also see a lot of disruption. And this disruption will basically, happen across sectors like financials. It will happen in consumption space with auto, media and entertainment. It will happen even in, old economy spaces like energy, in utilities. So I think from our perspective, what we are trying to do is we are trying to also, try and understand that how some of these, leaders in each of these, sectors, how are they preparing themselves for this eventual disruption? And the other thing that we are also trying to do is that do our DCFs, do they factor in such kind of disruption risk or not? So I think these are the two areas that we are trying to work on, because I think opportunity wise, I think there is tremendous space for most of the sectors to do very well, and that is so India has this twin benefit. One is the penetration of products. The second is the growth itself. So even if you take a simple thing like credit growth, for last so many years, why do we think that banking overall, except for this NPA challenge, overall banking in India has done very well? Why? Because you had this wonderful opportunity of penetration, which means credit to GDP going up, and GDP was also growing. So then you get, once these twin engines fire, then top line to some extent is underwritten. Then all you have to do is you have to identify the right platforms or the right vehicles through which you enjoy basically this outcome. And for that, I think this disruption is one challenge which one has to deal with when one is trying to analyze these opportunities.
According to the research that we have, over the next 6-7 years, even if India grows at a nominal GDP of let's say 12%, you can easily double your GDP. I mean, today we are at about close to 2.4, 2.5 trillion dollars, and we can become a $5 trillion economy. Now, when we analyze this journey of $2.5 to $5 trillion for a lot of other economies, it threw up a lot of exciting outcomes in terms of a lot of businesses getting created, a lot of companies becoming very, very large. So according to you, what are the big opportunities for India over the next 7 years, and as a result, as an investor, are there any sectors or themes that you think look very exciting?
Sure. Again, a good question. I think there are several opportunities that will unfold over a period of time as India progresses from a developing nation and over time into a better or more developed country. As you progress, as you improve in terms of per capita incomes, obviously your income levels are growing and your propensity to spend also is growing. We have a significant middle class population, which is an aspiring population, and therefore, to my mind, I think the next 7-8 years, the consumption theme is likely to be one of the strongest drivers of the economy. And it's unfortunate that the investment piece or the gross capital formation in the economy is not measuring up to what you would have wanted in an economy like ours, and we are far lower in terms of the standards in terms of infrastructure in the country. But despite that, given the requirements of the nation, given the fact that we are still struggling to grow, my sense is that the driver for the next few years will have to be consumption. And within that, the urban consumption in any case doing very well. I think we are seeing some traction on the rural side as well. The investment piece will take a little while longer and probably take another 12 to 18 months, maybe not 12, I think 18 to 24 months for that cycle to really come back to a strong one. But over time, that also has to catch up. So if I see the progression that is likely to over the next few years, and what are the drivers that I see consumption as the key driver, both urban and rural. Urban is anyway kicking and doing very well. Rural is the next piece, which is with a reasonable monsoon, hopefully, and with the government thrust on infrastructure, on the rural job creation as well as the infrastructure around the rural economy. I believe the rural economy also should start performing well and drive consumption, followed by the government spending on infrastructure, which continues in any case. So we have seen the last few years the government thrust on public infrastructure, including roads, irrigation, railways, etc., metros, all of that is continuing. I hopefully, despite the fact that we have an election year, that will continue to some extent, and the orders that have come or have been awarded should see some fruition and some activity also improving. So that is the next driver that I see. And finally, end of it, you would have the export story, and then followed by the investment cycle from the private sector. So that's how I see it unfolding. Now, when you talk of sectors that or the opportunities that this is likely to throw up in terms of consumption, from a very macro 40,000 feet view, I can say that with the kind of population, 140 crore population that we have, and with such a big burgeoning middle class with aspirations, with better exposure given the internet penetration, the media penetration, etc., I think the trends in terms of customer spends and in terms of consumer spends are going to change dramatically. If you see in this country, if you just analyze the kind of stocks that we have today in the market, for a 140 crore population, we have hardly one real estate company which is large cap. We have hardly one retail company which is large cap, and that's a far cry from what it should be at this stage of the evolution of this economy. You have no hotel company which is large cap. So I see multiple such opportunities
You
emerging.
see a lot of new businesses
Some of
listing
them,
and
absolutely. The insurance space has now come. So any play on that demographics piece or and on consumption is likely to do well over time. But some of these sectors which are a no-brainer given the way other countries have progressed and the way they have developed over time and the cycle that they've gone through, it's a no-brainer to me that some of the high-quality names in the listed in the market today will be at multiple times of what they are over the next 10 years. And that's the beauty of this market, and that's the luckiest part for our generation, that we are in a stage where we can visualize that some of these sectors can grow significantly, and therefore some of the high-quality names can become the next blue chips and be in the index in the next 5 or 10 years.
if you'd like to give us feedback, you can write in to us on email, follow us on Twitter, or watch our videos on YouTube. Thank you very much.